Hi students, welcome to the video on cost accounting at your fingertips. This is the second video. In this video, we focus on preparation of statement of cost and profit and tender and quotation. In the previous video, we already analyzed how we prepare the cost sheet, that is statement of cost and profit. So first, prime cost. It includes raw material consumed. For calculation of raw material consumed, we have to take into consideration opening stock of raw material, add purchase of raw material, less closing stock of raw material. We will get raw material consumed. Then plus direct labor or wage. Then plus direct expenses. The sum total of three, direct labor, direct expenses and raw material consumed, will give us prime cost. Then the prime cost will add factory overhead, all indirect expenses related to factory like indirect labor, factory heat, light and power, factory insurance taxes, repair to plants, factory supplies, depreciation factory building, depreciation on factory plant. So it will come under factory overhead. Prime cost plus factory overhead, it will give us factory cost incurred. Then we will add the opening stock of work in progress and minus or subtract the closing stock of work in progress. We will get factory cost or work cost or manufacturing cost. Then we will add office and administrative expense. All expenses related to office will be added here. Then we will get cost of goods produced. Then in the cost of goods produced, like opening stock of finished goods less closing stock of finished goods, we will get cost of goods sold. Then in cost of goods sold, we will add the selling and distribution expenses like advertisement and research expenses, then commission to the salesman, whatever that expenses all related to that selling and distribution for expansion of sale are added. Then we will get cost of sales or total cost. Then by adding some margin as profit, we will arrive at the sales price. Then in this video, first we should discuss what is tender and quotation, what is the main difference between tender and quotation. So tender is an invitation to a bid for a project. Suppose a government is preparing a project, suppose construction of long bridge. Then the government invites tender to the suppose A class contractors. So it refers to the process whereby government and financial institution invite bid for large project that must be submitted within a finite deadline. A client can choose different types of tendering based on the expertise needed, nature of contract and the complexity of the construction. It may be open tendering, suppose it is open. Anybody who will get the highest, who will offer the lowest price for the tender will be selected. That is open tendering. Then selective tendering, they will select some good or reputed contractor. Then negotiated tendering, on negotiation it will done. Buyer may take into account factors such as technical expertise, delivery times and over value for money. Then quotation. Quotation is a document of setting out the estimated cost for goods or service or procuring or purchasing something. A quotation letter is sent by a seller or service provider to the buyer. So component of quotation is only price, but the component of tender is quality standards and price. So quotation refers to a document that a supplier submits to a potential client with a proposed price for the supplier goods or services based on certain conditions. Whereas tender is an informal invitation to bid that is issued by the buyer and include detailed requirements and the terms and conditions that potential supplier must follow. So this is all about tender and quotation. Here this is one problem. In this problem we will prepare the statement of cost and profit. From that we will arrive the unit price of, that is raw material, labor, then factory overhead, administrative overhead, selling and distribution overhead, and we will give quotation for some goods. Here V Limited furnish the following information for 10,000 TV display panel, that is the components of TV, that is display panel, manufactured during the year ending 31st March 2023. That means it starts from 1st April 2022 ends on 31st March 2023. Then particulars given: opening stock of raw material 1 lakh, work in progress 6 lakh, finished goods 4 lakh. Purchase of raw material is given 9,80,000, direct labor 15 lakh, indirect labor 4 lakh, selling and distribution overhead 4 lakh, heat, light, power 2 lakh, factory insurance and taxes 50,000, repairs to plant 40,000, factory supplies 50,000, depreciation factory building 1 lakh 60,000, depreciation plant 1 lakh, salary and manager expenses, that is office and administrative expenses 5 lakh. Other information made available is factory cost 40 lakh, cost of goods produced 45 lakh, raw material consumed in 2023 10 lakh, cost of goods sold in 2023 46 lakh, profit 20% on selling price. So it is estimated that production could be incurred in 2023-24 by 50%, rate of material and direct wages will increase by 10%, prepare quotation for 15,000 TV parts, spare parts in 2023-24. So factory overhead have to be recovered as a percentage of direct wages. Mainly the factory overhead is related to direct wages or direct labor, office and administrative and selling and distribution overhead based on work cost. We will prepare a statement of cost and profits for 10,000 TV display panel. Here we will take 3 columns. One is particulars. So first, statement of cost and profits for 10,000 TV display panel. TV display panel. So first is particulars. Here to cost, here per unit cost, it is in rupees. So first we will calculate the raw material consumed. The raw material consumed is given. Raw material consumed. So for raw material consumed, we will take into account first opening stock of raw material 1 lakh. Opening stock, that is 1 lakh, and purchase of raw material. Purchase of raw material, it is given 9,80,000. Then less closing stock of raw material. Closing stock of raw material is not given, so we have to calculate the balancing figure. Closing stock not given, but raw material consumed is given here, that is 10 lakh. So here we will get 10 lakh. Here we will get 10 lakh means here it is 80,000 is the closing stock of raw material. When 10,000 is the cost of 10,000 TV display panel. So for 1 unit it is 100 rupees. Then after raw material we will add direct labor or wages. Direct labor here is 15 lakhs, but direct expenses is not given. So when direct labor 15 lakh, per unit is 150. Then we will get the prime cost. So here prime cost. So prime cost is here 25 lakh, here 250. And factory overhead or factory expenses. Factory expenses is here, we will write indirect labor 4 lakhs, then indirect labor, that is 4 lakhs. Then heat, light and power 2 lakh. Heat, light and power 2 lakhs. Then factory insurance and taxes. Factory insurance and taxes, it is 50,000. Then repair to plant 40,000. Repair to plant 40,000. Then factory supplies. Factory supplies, it is 50,000. Then depreciation on factory building. Factory building, it is 1,60,000. Depreciation on factory plants, it is 1 lakh. So total comes to here it is 000 10 lakh. So work cost or factory cost incurred. Work cost or factory cost incurred is here. This is incurred. It is 35 lakhs. And opening work in progress. Opening work in progress. So opening work in progress is given 6 lakhs. So 6 lakhs. Minus closing work in progress. Closing work in progress. That is the balancing figure, because work cost is given here. So in the question work cost is given. So closing work in progress is the balancing figure. So work cost is given, that is factory cost or work cost 40 lakhs. So closing work in progress is only 1 lakh. Then add office and administrative overhead. Administrative and office overhead. Your administrative office overhead is 5 lakh. So cost of production is 45 lakh. Cost of production, that is 45 lakhs. 45 lakhs. Then add opening stock of finished goods. Opening stock of finished goods, it is given 4 lakhs. So 45 lakh plus 4 lakhs. Minus closing stock of finished goods. It is the balancing figure. But cost of goods sold is given. Cost of goods sold is given. Cost of goods sold is given. How much? Cost of goods sold. Here 46 lakh. So cost of goods sold 46 lakhs. 46 lakhs. Then so here it is definitely 48 lakh plus 4 lakh, 49 lakh minus 3 lakh. Closing finished stock is 3 lakh. So it is 46 lakh. And selling and distribution overhead, it is given 4 lakhs. So cost of sales or total cost. Cost of sales or total cost. Total cost, it is 50 lakhs. 50 lakhs. Then add profit. Profit is given, that is 20% on SP. 20% SP means let the SP be 100, profit 20, so cost price 80. When cost price 80, profit 20. When cost price 100, profit 25%. 25% means 1/4. That is 12,50,000. So total comes to 62,50,000. This is profit. Profit here is 12,50,000. So 62,50,000 means 625 is the sales price per unit of one TV display panel. Then here we have to give quotation. It is estimated that production could be incurred in 2000 increase in 2023-24 by 50%. 10,000 is there. 50% will be increased. That is 5,000. So production will be 15,000. For 15,000, quotation will be required. So rate of material and direct wages will be increased by 10%, and percentage of factory overhead to recovered on direct wage and office administrative selling overhead on work cost. It is given. So it is, we have to calculate one quotation. While calculating quotation, we have to consider the relationship. Here we will prepare one quotation. Quotation here we will prepare. So quotation for 15,000. Quotation for 15,000 TV display panel. Here first we will consider the direct material. Here direct material is here. How much? It is per unit is 100. First we will calculate per unit, then for 15,000. This is for 15,000. Per unit it is 100 rupees. Then it is increased by 10% in 110. So 110 is direct material. Then direct labor is 150. Then 10% increase means 165. So prime cost is 275. This is prime cost. Add factory overhead. Add factory overhead. Factory overhead. You know the factory overhead is calculated as a percent on direct labor. Here direct labor is 15 lakh. Factory overhead is 10 lakh. So it is 10 lakh by 15 lakh. That is 2/3. So 2/3 of factory overhead is 2/3 of direct labor. So it is 165 divided 2/3, that is 110. So factory cost incurred or factory cost is 385 plus administrative and selling overhead. First administrative overhead. So administrative overhead is here 5 lakh. So it is on based on work cost. Work cost is here 40 lakh. So 5 lakh by 40 lakh, that is 1/8. 1/8. So administrative overhead is 1/8 of 385. 385, this is work cost plus 1/8. 1/8 means 432, then 65, 8, then 10, 1, then 22. 48.12. So administrative overhead is 48.12. So it comes to, that is 12, then 13, 3, 4. 433.12. Then we will add the selling and distribution overhead. And this will give us cost of production. Cost of production. And selling and distribution overhead. Selling and distribution overhead, you see here, it is given selling and distribution overhead 4 lakh. So 4 lakh divided by 40 lakh, that is 1/10. So 1/10 of work cost, that is 385. So 1/10 of 385 is 38.50. So total cost or cost of sales or total cost of quotation, that is total cost of quotation is now here 62 pies, then 471.62. Then profit is 20% on selling price, that is 25% on cost price for this quotation. Add profits, that is 25% on 471.62, that is 1/4. 1 this much. So amount is 2. So 589.52 is the quotation for 1 unit of TV display panel. So for 15,000 you multiply. So here we will consider for unit for 15,000 we will multiply side by side, we will get. Otherwise for 1 unit it is 589.52 into 15,000 we will get 15,000. So it is, suppose first we will add 30, that is 589,520 into 15 into 15. So it will give, that is 0. This is 5. Then it is 0, 2, 5, 9, 8, 5. So total comes to 0, 0, 8. 88,42,800. That means here we can check 589520, or it is 15,000. For 1,000 this is for 10,000, then this, then 50%. This, so total comes to 802. So 88,000, 42,800 is the quotation price of 15,000 TV display panel. Thank you for watching this video. In the next video, we will discuss some another important problems on cost sheets. Don't forget to like the video, share the video and subscribe the video.